talk about a confusing market right now. Not even confusing, it's just really tough to get a handle on individual names. Because look at today, okay? Here's today's tally. You got the Dow down 92, the S&P 500 down 9, NASDAQ down a little bit more, down over 0.5%, right? So 71 points there on the NASDAQ. And then the Russell, which got slammed yesterday, snaps back almost 2%. I think it was up over 2% today at a time, and is up 41 points on the day. All right, so you may not, you may not want to get involved and think about these things enough while you're trading, while you're placing bets, but it's going to obviously have an effect on the outcome. Okay, you see what's going on in all these high sales, high growth names. They're getting destroyed, right? These speculative names, SPAC names, all that stuff. All right. It was a bit easier when this market was cut in half. You had high growth and the more speculative stuff was in complete sell mode, and reopening, reflation, and inflationary plays were in vogue. You could have bought any of them. They had momentum at the time. Now it's even more difficult than that, where they are flipping between sectors on the reopening side. All right, and what we're going to see is the stuff that has been really weak. We saw some signs of it today. You're going to see some just oversold rallies because they've just been going down in a straight line. Okay, doesn't mean they're back. They may look like they're back. I'm sure they're going to get people excited when they go red to green. But, it's just normal price action when a move gets long in the tooth like it has on the downside in these high growth names. So that's adding even more difficulty as far as trying to swing trade names position-wise. Okay, that's my definition of swing trade. If you want to buy something, buy some calls, because the majority you're playing on the option end, and you want to sit in something and hold something for a couple months, which way are you going to go right now? Which way are you going to go? And you go reopening, some of those names really have come a long way, almost too far, too quick. We see what's going on in energy. We saw what happened recently in the financials. So it's just a really difficult environment where you really want to be extremely selective in individual names. I made the point that we went through a really lengthy period, a nice long period where it was beneficial to look for individual names for alpha, right? We continue to talk about that, where forget about what the market's doing. The market may be flat for the next 2 weeks, but under the hood, there were opportunities all over the place. Growth names, reopening names, SPAC names, $2 stocks. We had it all. Okay? That was at the peak when everything was beautiful. All right? And an environment where it's a lot easier to make money. Okay, so now we have almost not the total opposite. The total opposite would be everything would be shitty. We have, something very, very different here. Okay, so I made the point recently that as far as even maybe being on the tactical side, right, on the trading side, you're almost better off looking for opportunities in just the S&P 500. Don't even try to get cute. Right? Don't even try to get cute and play the NASDAQ or the Russell or any of these things. You're better off right now until the playbook changes, just looking for the opportunity in the S&P 500. Why is that? Because you still have, and this is the reason for what's going on, in a sense, the reason why rates have been rising off the reopening of the economy is that the Fed has basically left it in cruise control. All right, so they want to run hot. They want inflation to run hot. They're not concerned about rates starting to push higher. Okay, and doing that, all right, has added this confusion to the mix as far as sectors and individual names and all that stuff. Okay, but the plot on the plus side, if you look at the Fed balance sheet, it's been expanding. The likelihood is the S&P 500, right, just the overall market, is going to find dip buyers and support off most pullbacks. And that's where, you know, the easier opportunity may be. Again, the reward is not going to be there because you're not going to get, you know, some runaway rally, not with this type of breadth. But like we've been seeing, you're going to see a lot of these. Where's my pen? There she is. You're going to see a lot of these things just, you know, snap back with some gusto initially anyway. So, again, I'm an individual names guy. That's what I get excited about in this game. And I'm not going to, you know, I'm not going to say you're going to find out, you can't find any opportunities. It's just your success rate, right? Your ability to cash a ticket as far as swing positions goes down dramatically from where we've been, where we're coming from. That's the main thing. That's the main thing to understand. Doesn't mean every single name you end up playing is going to be a loser, right? Even that would be easier in a sense because you sit on your hands and do nothing and you shouldn't have any FOMO or anything. That's not even a bad scenario, and you wait because the overall market would be selling off and you'd be waiting for an opportunity there. Yeah, but now we don't have that. We have where the overall market should be supported, okay, off pullbacks, and trying to find individual names that will benefit the most off that support is just a tough game right now. It's a tough game, okay? And, you know, this is going to loosen up. It's a matter of when. It could go on for a while, right? There's so many different things that can come out of this. So many different things, all right? And this is something we talk about a lot too, where, all right, maybe the growth names are oversold. Very good possibility, you know, over an intermediate term where they find a bottom. You know, they just stop bleeding out. Okay? Does that come at the expense of the reopening theme, the banks, the industrials, the trannies, the transportation names that have been red hot? You know, who knows? Maybe. All right. And I think I tweeted out a clip on Bloomberg. I could find it quickly if you want to. I don't know if you guys got a chance to look at it yesterday. Some of the comments on the video. I mean, I don't know how these people are in the market commenting about the guy's hair and the guy's nose, and I don't know. But Reader is from BlackRock. He's he's one of the top money managers on the street. Bonds, stocks, he does it all, right? And he's been pretty bullish throughout, all right? And he had his view on things, just his outlook on things was pretty much what we've been talking about. And he had something really interesting to say about it, okay? He mentioned that he has one of the highest levels of cash he's had in a while, okay? And why? He still thinks the market goes higher. Okay, so he's not bearish. But what we're talking about, he thinks there are a lot more landmines out there, grenades you got to dodge. Okay, volatility events, sell-offs, things like that, that the best approach, the one he's taking right now that he feels is the best approach, is that he remains in a high level position of cash. And when something goes off, meaning the market sells off on some news and there's a spike in volatility, that's where he's looking for entries. Okay. A hedge fund blows up. He likes Viacom because he got smashed. That's an opportunity. So he's solely looking, he's in a high, he's got a high level of cash, not because he's bearish and he thinks the market can really come undone here, but he just thinks that there are going to be more of these quick, short, violent pullbacks in both names and the indices. And that's where he would be looking for opportunities and entries. All right. So, it's kind of what basically we've been saying, right? Everything is not all tied together. Everything's not correlated here where you're going to get some big sell-off or runaway rally, right? Everything, the breadth right now, I can't see a rally going anywhere on this breadth. So Jules agrees, so you don't want to, Jules, cut it out now. All of a sudden you wake up out of nowhere. You don't want to go and stick out your neck and chase highs, right? Chase off an up move or rally. And then all of a sudden, a couple days later, whoosh, some hedge funds got headaches, or Biden's talking about a new tax plan or whatever it is, and they're going to sell the market off and you get a little spike in VIX only to be sold again, right? So that's where to be patient, look for opportunities, okay? And, the reason why we can relate, well, especially those of you who are members, the game plan has been to use tactical sentiment as kind of a compass, right? As a guide. All right, so try to look for an entry or something to do on the long side when you get short-term sentiment in a favorable position. All right. And then when the squeeze comes, the market rallies, and we all have a tendency to get excited off of that, that's where you probably want to lighten up, or even more importantly, not look to put on any additional risk. All right. And again, it's easier said than done. It does, for me anyway, it becomes easier to follow, pay attention to, and to put into action when you're looking at these indicators as much as we do. All right. And there's no need to be mechanical about it, robotic about it. Right? You see a name you like that hasn't rallied. I mean, today, okay, we don't have a bullish sentiment out there on a tactical basis, right? We're neutral. But, I saw the action in TJX and I wanted to buy some, So you don't have to be a robot about it, but, generally you want to stick to that guideline. You know what I mean? You want to stick to that guideline. Like for me, if, TJX sits around or pulls into bullish sentiment, I'll likely add to that, So that's, again, a general guideline to what we want to stick to until things loosen up. And what I mean by loosen up, broader participation, and just, you see new names, new leaders, new flow. We're not seeing that. We're seeing a lot of the same names on the reopening side that are long in the tooth. We don't even know. We got to look at open interest the next day to make sure they roll, right? U.S. Steel catches sweepers, for the first couple days. Then the last 2 days, they're still sweeping it. It looks like they're buying it. And then later in the afternoon, they're closing out some position, so they're rolling. That's why initial activity and decent risk reward spots are worth paying attention to, because the flow is a lot cleaner at these areas. A name like X, you had opportunities to buy dips if you wanted to. If you wanted to. Now, once a stock starts moving, and there's nothing wrong with it, it keeps going higher, but it doesn't matter. It doesn't mean that the flow is clean. There's some rolling involved here. There's some rolling involved. So, but my point being, it's the same, it's a lot of the same names, right? Like GM, Ford. Ford caught, some decent action earlier today. The reason I can't get too excited about it, even though it's a little breather, Ford, this thing got tattooed. Tattooed. Okay, if you like the name, it's not the worst entry because you got a little breather here. But, it's not the same as if it was, coming out of some lengthy consolidation in the first round of action that Ford is catching. All right, so what is eventually going to happen is when we finally move out of this, okay, and the timing, who knows, but what eventually is going to happen, we're going to see new names emerge, new action emerge, okay? The likelihood is a lot of names we never even, well, I won't say we never heard of, we know of a lot of names, but that we've never seen action in or never even thought of owning. Even if the growth names come back, there's going to be more than likely, when that time comes, there's going to be a batch of new names that join in the leadership. It's not going to be the same exact names. While everyone's waiting for those select EV names to come back or those SPAC names, they're going to miss out on a whole bunch of new names that are starting to get attention. MGNI, again, some of you have heard of the name prior to it catching action. All right. A lot of us, never saw flow in it. All right. But it was one of the bigger winners off action. Right. Say Fubo, same shit. So that's what we have to look forward to. And that's what has a tendency to happen, each and every time, especially like when there's a correction like we've seen, because this is a legit correction in growth. It was much needed. It had to happen. Even if you're bulled up and you love to play growth, this had to happen. Because the inevitable was it was going to happen, and the likelihood is it was going to happen if you're a big growth fan, with you a lot more long than you probably were going into it. Right? Going into this round, you really had to chase some of these names. You really had to chase. Right? If you bought MGNI and you got caught, the likelihood is you paid $30 above where you initially owned it off the action. Same thing with Fubo. All right, so we have to look forward to that, so don't get too discouraged. But in the meantime, as we've been saying, the momentum and where they're buying the dips for the most part is on the reopening side. That's where it's been to this point, right? The banks, there was some selling off this hedge fund nonsense. They bought the dip. They bought the dip. So that's where we want to, that's where you can feel a little better about things, that there's at least there are dip buyers there. Some of the growth, they're starting to show a little bit of being oversold in a sense, but a lot of these things have been just in meltdown mode, complete meltdown. Yeah, those names, I don't know who mentioned that, but Cat, right? All these names, they buy every dip. They buy every dip. Okay, what's difficult about these names, because they're so long in the tooth, is even with this dip, you don't want, well, I don't want to buy here, okay, and go out 3 to 6 months. That's not what I want to do at this stage of the rally. What I rather do is, if I'm going to buy a name like this that I like off dips, is buy those dips, sell the rips. Buy the dips, sell the rips. You know what I mean? That's the the safer route, the more conservative route. Because the reason why is you buy this and you go out 3 to 6 months, you may get some upside, but if you're not taking that off the table, you might happen to be around when these things do go through their own correction. And they easily can. I mean, look at this. All of a sudden, Caterpillar is a beast. It's a big move. So just like the growth names, they're going to have their time where these things get hit over the head at some point. It's the way the cookie crumbles. All right, so it was interesting. If you have an interest, again, it's something we've been talking about anyway. I have it. You got to scroll back on my Twitter. You know this guy. He's on the box a lot. CNBC in the morning, Bloomberg. Let's get to the sentiment stuff and some of the other stuff. All right, so here are the Goldman. Here's the Goldman Rundown, their sentiment indicators. And you can see it doesn't look too promising here. Oh, can't move this. Oh, there we go. All right, little by little, all these things have been moving gradually to the risk on, all in side of things. So, that's not good. That's not good. We want, again, we're talking about intermediate term sentiment, stuff like that, especially. All right, we want them going in this direction. All right, so positioning is full. Does that mean the market has to crash? No, but you see what the risks are, right? The hedge fund that just went under, that's just one. Okay, he was leveraged a gazillion to one. Right, and that's what the market's worried about. This is not a systemic thing. What the market's worried about is that's just one schmuck. Like this rally and the Fed being so easy has been going on for a long time. Is there really just one schmuck out there? One degenerate who took the needle and went all in? What this tells us is no. Okay, there are plenty of schmucks. It's a matter of if they blow up or not. But they're more inclined to blow up when they're all in. All right, so this is what this stuff is signaling to us. This is what all those indicators, if you take an average, that over that 75% hump that Goldman uses as a caution sign. This is the other one we look at, the momentum and risk appetite indicator. You can see this thing started curling a little bit here. And that's the risk. It could stay elevated, but once it curls. But we could even see it in the flow. The risk appetite out there is slowly waning. The flow's been extremely selective. Any sweeper activity worth a shit is really selective out there. And it's nowhere near what we were seeing. Like we were seeing mayhem, right? Mayhem. Like the flow was just out of control. Remember those days we used to talk about NEO for like 3 straight weeks, trading, what was it, 300,000 contracts in the morning? That's not going on right now. Oh, Tesla, $1 million sweeps left and right. That's not the case anymore. It's not the case. Now you see it. We saw it initially, especially in these reopening names when they had to chase. But now, it's really selective, really selective. So that's a good thing. But, the process of that cooling off has its effects on prices. of stocks and the market. This is something I've been keeping an eye on as well. If you remember, these are the financial conditions, Goldman's financial conditions index, right? So when this thing is elevating, that means there's tightening going on. That's bearish for stocks. And obviously when it's heading lower and low, it's a very easy environment. You don't get much easier than down here, okay? Now you see there's a little bit of lift here that's got nothing to do with what the Fed is doing. Okay, the Fed, again, you look at the Fed balance sheet, it's been increasing. You got the government, as far as stimulus, they're throwing money all over the place. Now Biden's talking infrastructure, throw another couple of trillion. There's money being thrown all over the yard. But the difference here is that the market is doing the tightening for Powell. Okay, so in simple English, what the market's saying is saying, listen, Mr. Powell, it's been all fun and games. It's been beautiful. You did what you needed to do. It's time to chill out now. And Powell he don't want to chill out, right? Yellen, she's known for this. She wants to run it hot, step on the gas, overshoot. But the market's saying, we need you to chill out. So the market, the action the market takes by saying that is by rates pushing higher, and ultimately that creates tightening out there. All right, and that's what we're seeing here. Okay, it's not having any major effect anywhere, right? Credit seeing a little bit of action, but nothing dramatic. All right, but the fear is that if rates continue to rise, especially at a quicker pace, that you're going to get tightening, too much tightening, right? And then because the Fed's going to have to raise rates to combat inflation. You know what I mean? So that's the fear out there. That's the fear out there. But Powell's sticking to his guns. And if you want to know why Powell's sticking to his guns, Yellen went through this, okay? The market forced Yellen, what year was this? I think it was 2015, 2016. The market forced Yellen to be less dovish. And I don't know if she raised rates. Did she raise rates then? Something happened back then. Maybe it was 2013. Whatever it was, the market did the same thing to Yellen. And Yellen capitulated and gave in to the market. And she regretted it. So now the Fed's trying to be stubborn here. The Fed's saying, listen, you tried this shit with us before. We're not doing it this time. We're going to wait it out a little bit. Yeah. So, we'll see how it plays out. Again, we'll see how it plays out. But you got to understand, rates rising. Oh, this is something else I wanted to talk to you guys about so much today. Rates rising have an effect on a whole bunch of things as far as individual names and companies. These high sales, these high growth sales names, which we all love, then they're not coming back into play with rising rates and the threat of any inflation. They'll have their squeezes, they'll have their this and they'll have their that. The problem is every time rates rise, you'll have supply hitting the market, algos selling the shit out of them. All right. And the reason why I wanted to talk about that and bring that up, and those of you who are members, you can search it. I'll try to tweet it out again, but hold on. I have it under likes here. If you remember the guy from Goldman, he's one of the top analysts on the street. What the hell's his name? He was talking about and actually had a decent report of what names to even think about owning in this environment. Like if you just pick from this litter, you will do that much better. Exactly, the short duration names. Okay, here it is here. Back on March 12th, if you remember, I posted this. So, I'll repost this again. There are names on here that you should never think of touching because there's automatic sells. The playbook is they call for selling in these names. And, there are names to own. And these are the names you should be targeting if, you see dips. MGM, right? A lot of you like that name already. KHC. We spoke about that name many times. CVS. What other names are on here that we've been talking about recently? Intel, WDC. There's some tech on here. What I found, WRK, that's been a beast. Okay. There's some names on here like First Solar, which I didn't, I would have never thought of that. So what Costin, that's his name. What David Costin of Goldman is saying is don't get too caught up in value growth and all that crap. Okay, because that's not the problem with rates. The problem with rates is this. And as long as rates rise, it's going to have an effect on these names, both good and bad. So it's something I think we should all, keep an eye on more so in this environment. Again, I know it's a pain in the ass, but hopefully you realize that, it may be a pain in the ass, but you just tried buying the blood in some of these growth names and it's not working. You know what I mean? It's not working. It's not worth trying to catch that little up move and then getting run over. Cody. There's some home builders on here. I thought the opposite. Shows you how much I know. But again, home builders, it's these are duration plays. So it's completely different than what I was looking at. The pros are short, and not even the pros, the machines, we should say. John, the machines are shorting these things on every tick higher in rates. And then what you see is every time, rates settle down a little bit, you get a bounce. You know what I mean? Like today, right? I think they bounced today, last I looked. But today, bonds were up. Rates obviously would be in check if bonds are up. And I saw quite a few red to green in some of those high growth plays today. Who knows what tomorrow brings? A lot of the names on here are a lot of names you would think are no good, right? The Fastleys, Net, D-Dog, Zoom, ZS, Roku, So it's just one more thing to maybe make the process easier. If you see a name that catches action and it happens to be a name, on here, I'm talking about names that catch action that maybe is not too convincing. They catch a couple sweeps and you're not really sold, but maybe you see it's a low duration play and it may be worth it. But Costin's really pounding the table on this playbook, right? And this is why. He showed it this morning, an updated version. If you look, right, the baskets of these names, it follows rates to a T. Highly correlated. And that's why. So here you got the light blue, the treasury, the 10-year yield, and you have the a long versus short duration basket here in dark blue. So you see almost moves exactly in the same direction. All right, so that was the other thing I wanted to share with you guys in regards to that. Let's flip back to just two more things I wanted to show you here. All right. Here are hedge funds. So again, not in sell zone area, but elevated enough to where we can see them blow up from time to time. Ideally, at some point, we would love to see all this stuff cool off, but with the Fed still highly engaged in QE, it's not going to happen, man. It's not going to happen. It's not going to happen. but for a sweet spot in the overall market where you don't have to worry about duration picks and rotation picks and all that crap, what's the flavor of the day sector-wise for the next couple of days? For that ultimate sweet spot, you're going to have to see all this shit get washed out. All of it. The majority of it. You got a ton of work to do there. So in the meantime, we got to do what we got to do, right? And here's what we got to do. Sectors. Last time we spoke, if you remember, on this webinar, again, I know members, we talk about this every night, but we were talking about these in particular, if you remember. Financials and energy, right? Poor risk reward. Now, they look a lot better, huh? Look a lot better. So as I was saying, Jules, are you going to drive me nuts now? All of a sudden, you've been in a coma all day. Now the webinar, you're going to bark every 5 minutes. That's the story? Christ almighty. Like we were talking about on Sunday night, right? If you are interested in these groups, okay, the best thing to have done prior to this little wash in them was to sit tight and wait. And now, you're close to getting some decent buy signals here. Okay. More so energy. I thought financials was going to get there quicker because of this hedge fund thing, but they bought the dip already in it. But, look at energy. They bought the dip, and then there's been a little bit of a soft patch. All right. So ideally, you want to get these things. I mean, they're close enough. If you are interested in these things, if you were licking your chops, right, is the way I put it. If you were licking your chops to buy or start to buy energy over here, okay, into this, right? That's the problem. This is the problem. You can buy it here, and if you don't get out here, you get caught in this, right? That's the problem. So now you can start looking, you could start looking. You could start looking. If you want to be aggressive, you could start buying into weakness. Use these lows as, the spot. All right. And again, the thought process there is even if you're early, right? Even if you buy and there's still some consolidation or some weakness, when that potential bounce comes, you're going to be rewarded. Now, of course, it can break down in the death of energy, but that can happen anywhere, right? That's the risk anywhere. There's no guarantees, okay? The problem up here is that there's a high probability of this coming, right? That's what the sentiment's telling us. The sentiment's telling us that there's a high probability the risk of a drawdown. The risk reward is poor, okay? So now you have a more promising risk reward, right? And pretty close to what we look at as a signal of a favorable risk reward here in some of these things. Yeah, so you have the energy sector, you have financials, right, to keep an eye on. Mining, right? Remember, mining, hot, cooling off. Mining is more Freeport, McNamara, whatever the fuck it's called, FCX and the rest of them. Materials didn't cool off as much, but cooled off a bit. Industrials, not as much, but cooled off a bit. Started, right? Started. This is what I think a lot of us would want buy signals again, right? Even just for trades. Because what's interesting is this is some of it is part of the playbook right now. Semis. Semis aren't a bad thing to own right now. Some of them. So we would like, I know we'd like another, right, the cyclical ones. We would like a buy signal there, that's for sure. You know, we got this, and you had tech, the recent pullback, and biotech, right? And this. So, all right, so we got some things to look at here, believe it or not, because of the crazy rotation. Yeah, AMAT, TXN, NXPI. I mean, if you guys need a list, I could give you a list from here to Chicago. There's some beauties in there. There's some beauties in there to target on pullbacks. The problem is owning, you know, too much for too long there. Marvel, without a doubt, Marvel. You know, here's the thing. Like you look, another beast, LRCX. The problem with it is, yeah, same thing like with a lot of these reopening plays. This didn't just start, as you guys are well aware. It's been going on for a while, right? These things have caught fire. WDC, Micron, we've been talking about for a bit. So, you know, you don't want to fall in love too long here because they've been moving for a while. I think the opportunity in these things are when you get that bullish sentiment, you get those pullbacks, you get some decent trades out of them. You know, you get some decent trades. AMAT is a beast. Like, look at this move. You know, so you see what's difficult about it? Like everybody, even us, man. I know me, I've been so gun shy that, you know, I missed all these things as far as swing trades. I missed them all because I was tactically trading everything. You know, I didn't want to buy and hold anything out there thinking that maybe the whole market comes in together. You know, but it didn't. They took down parts of it at different times. So while growth has been getting decimated, all the money's been going here, right? Yeah, on. That's another one. No, this too. Big move. Right? Some even the smaller ones have acted well, have held up well, I should say. But, you know, if you want to go safety, big, TXN is probably the cyclical poster child. TXN, and then you go NXPI, Micron, WDC, LRCX, you know, Marvel. And so there's a lot of others. But like TXN is the poster child, in my opinion, for cyclical semi. So that's it, right? So that's everything, I guess, that we look at here. Oh, here's so that's more this sentiment stuff is not the day-to-day gyrations, right? This is more of breadth with sentiment involved in the mix here. So you could see, like, let's look at here. Financial, it looks the same. Oh, energy here. You see how it came down, bounced off the green? Yeah, the Italian flag, I call it. This is basically this, but this is more of a moving average version of this. So look at energy. You see energy? You see how you see gyration down here? You come down, hit the green area, bounced off, bounce. You're not going to get all that bounce. You're not going to get all that noise here. Where's that? See, it's just more of an average of the day-to-day noise. Yeah, I would throw it in between short and intermediate term time horizon. One sentiment trader, the other one is Bespoke. I think Bespoke. All right, so I think that's all I got. Let's look at some names and now take the questions here. This was the action of the day. I bought some July's not Target. I keep calling it Target. TJX discount retail. All right, a lot of retailers have been catching action. Some of them hotter than others. This one's not the worst of spots. You can see a little bit of a breather there. So you got big retrace, and you got a nice breather here that they may be looking to bust out of. Another thing I'm noticing too, which is not usually a bullish sign, a lot of these defensive names are catching the better looking action. Staples were hot. Staples caught some action recently. This is a discount retail name. This is not something you buy when you're super bullish. That's for shit sure. I used to buy this thing. It used to catch flow during recessions. I used to play this thing. And this thing used to be a beast during recessions. Let me see if I can look at this. I remember a buddy of mine bought it off flow. When was that? Was it after 09? No. Yeah, it might have been during a recession, one of the recessions. And it caught action, and this thing just felt like it was up every day while the market was struggling. So you're right. Who said that? John or whatever. You're right that this is a discount retail name. But okay, look at this. Look at this move. What's Kohl's? Isn't Kohl's the same shit? No? What's the other one? DG and Dollar Tree, right? Well, those are dollar stores, though. But they're in the same, they look at Dollar Tree. That actually looks good. Ross. Maybe that was the one I'm thinking of. Ross. They got bought out? No. Ross is not the symbol. ROST, I think, right? What the am I typing? Yeah. Oh, look. Looks identical. Looks good. Talking about big breakout here. So I haven't been swinging much, you guys know, but this action was insanity. Especially now, the type of action we're seeing, insanity. Another bet that was interesting, Disca, they're buying blood there with some time for those of you who want to live dangerously. July's, nice looking sweep. You may want to wait for it to settle in a little bit if you like it. But it was a good looking sweep. A lot of noise there. Obviously. It's been a lot of flow, a lot of noise. There was a huge short squeeze, then a crash. But that was a nice sweep. Then you got this retail name. I scalped it because it was up when the action came in. Otherwise, it'd be worth a look. LESL. Anybody know this name? This is a fairly new name, IPO, and they sold puts here too. Yeah, that would be the pair trade, John, exactly. This is a pool. Yeah, somebody told me a spa play. No, pools? Pools were red hot. Remember pools? I think they missed their time, though, these nut jobs. If they would have came out during COVID, they would have hit the lotto. Look at this. Pool. You guys remember pool? Look at this. Finally breathing up here. Christ almighty. And they don't even sell this thing off. What a move. This was some move off COVID. Oh, they do spas, right? That's what somebody told me. Yeah. Interesting. And I guess please tell me it wasn't a SPAC. Just tell me it wasn't a SPAC, so at least I could keep an eye on it. This is a legitimate IPO? Good. Because if it's a SPAC, I'm going to throw it and flush it down the toilet. Yeah. So keep your eyes on it. It was up, nice today. Had a little bit of a move. I wasn't looking for too much because it was up already, but had a little bit of a move. Couldn't get my hands on much anyway. But keep an eye on it. They sold puts too. They sold the 20s for April, I think it was. I should have put the put seller on here too. May 20s, they hit it a couple times here. They paid roughly $450. SPAC sell-off? I don't think so. I want nothing to do with SPACs. Nothing. Nothing. I mean, they may have a bounce, Dean. You know what I mean? They may have a bounce, but I don't really have too much of an interest in them. You know what? No, I know. Dean was asking about SPACs. Here's the Ford action. Take a look at open interest just to make sure. They may have closed and rolled. It's very possible. There's been a ton of action in Ford, as you guys know. September 15th. This all came in a nice wave of action. General Motors, too, GM, caught some action. I don't have the volume on here. It all came in early on in the day. I think it was off a headline. GM, too, caught some action with it. They move together usually. Then had this breather and a nice secondary move into the bell. Look at the charts on these things. They've been solid. Look, every dip they buy, every dip, right? Every dip. Every dip. I mean, what catches me? Nothing. It was an aggressive order. It came in a wave of action. It was decent size. So, Ford is off a breather like GM. So I've been putting if I don't put names like this on a list, then you guys will be looking at no names off the top bet list. Some repeat names I've been leaving off because, it's just ridiculous how much action has been in it. There's no edge. But if they're off a little bit of a breather, I throw them on here. This Ulta bet, okay, I guess. I don't know why Ulta is not a reopening play. Yeah, definitely spec action. April short dated, not bad size. Why isn't Ulta reopening? Anybody, is it reopening? It should be, no? Anyway, the spot is not bad. So that's why I thought you guys might find it interesting if you're interested in the name. It should be reopening, Ulta. Right? All the women go out. They're not going to Ulta. Come on. So, not a bad spot to bet on a breakout. Again, like Ryan said, it's a spec bet. They're not betting on breakout. So, but an interesting name. DT, you guys know I like this name. It's tough name right now. Holding up, right? Like a few of these names, like Nuon and all that, they're holding up well. But where are they going? Where are they going? You might get a lot of these things. Yeah, you got Niners on a lot of these things. They might bounce. They should bounce. They should bounce. They should bounce. Like the SPACs you're talking about, Dean. If I was going to look at SPACs, I'd rather look at this. You know what I mean? Like if you have an interest in SPACs, I would just forget SPACs and just look at these names, the real companies that basically have been drilled. Because if SPACs are going to bounce, these names are going to bounce. And they got a better shot of bouncing. So what I mean by that, you got like Twilio. I think it caught a bet yesterday, Twilio, if I'm not mistaken. They were buying cheap, out of the money stuff in like RNG. Look at this. Look at this. I mean, you're getting close enough to where you should see a bounce here. Like, this RNG, think about this. Like, it flashed one here. This didn't get there. But the last time it had, like, bullish oversold signals here, look at this. The COVID lows. And then let's see. All the way back here in this correction. This stock, huh? Look at this stock. And you want to know why they're in correction? I mean, Christ almighty. These things have been strong as hell. Look at Twilio. Yeah, like, to me, like, the leaders in the group, like, if you want to get a good measure of the group and go to the best, Twilio, ZS, and Coop. Those are the three I go right to. Like, everybody has their preference. But those are the three I look at. Like, in Twilio was down today. I thought it was going to bounce yesterday. You had a niner there, but then reversed. ZS, that's another beast. Like, if they don't buy ZS, they're going to have trouble buying any of these names. Everybody wants to own ZS. Cybersecurity, crazy growth. Every growth fund in the country owns the ZS. Like, this is a beast. And you can see, right? Getting close to an area where you should see a bounce. These things shouldn't bleed out. Coop looks even more washed out. But you just scroll back and you look at the chart, and this is a normal. Like, I remember this correction in Coop. This was off initial activity, the rally off initial activity. And it actually was holding up well compared to the others. I remember it like it was yesterday, reported an unbelievable quarter here, okay? And the stock was up and went down because they killed these things again. But look. So they've been through it before. Yeah, I don't think these guys are dead. It may be some time. I don't think they're dead. Like some of the EVs and SPACs that may be dead for all I know. Crowd, let's see. Yeah, same thing. Crowd looks exactly the same. And Crowd is like one of the more newer ones, right? Like, it just looks like a normal, healthy correction. How far does it go is the question. But you got a niner there too. A lot of niners, huh? A lot of niners. FTNT. Oh, no. That's yeah. FTNT is not whatchamacallit, one of those software names, right? FTNT, like, been around. I remember this thing. Yeah. That's more like what's the other one? Like PANW or something. What happened here? I got stuck. Hold on. Oh. This trading view has been lagging on me on every single computer with the Zoom. How come? Look at this. There we go. Anybody else been having that issue with trading view? Or is it just me? Maybe it's too much going on here. Net. I haven't looked at net. Let's see. Yeah, niner there too. Yeah. It's the action there, right? There's not a whole bunch of appealing action in these things at all. There's nothing. Trust me, I wish. Like, the best action out there has been in this Nuon. It still looks good, right? Still looks good. It's just It may do this for a while. The question is, if you buy weakness with time, it may pay, but you got to have the patience. It has been the trading view, seriously, or is it just me? I don't know. All of a sudden, I've never had the issue. Maybe I got too much going on. Yeah, that's V. What was that? Oh, Yalla hit the nail on the head. Like, they gotta force me in. Like, you see what they did with TJX today? I had no intentions of buying anything for swing. You know what I mean? I just had no intentions. I'm waiting for, squeezometer, tactical bullish sentiment signal, a bullish signal on the anti-VIX, something for me to get, a little excited about a trade. I had no intentions. But then they come and they hit TJX, right? So it was worth a day trade on the equity. I bought some, right, to play out the day. Then they hit it again, right? Then they hit it again. And I said, you know what? I mean, it's a decent spot. They're bombing this thing. I gotta buy some Julys. And that was before they tattooed it even more later on, So you guys hit the nail on the head. Like, Nuon has had solid action, but, let them push me in, right? Let them push me in. Because if they really, that's what we want to see. We want them to get really excited about this stuff, right? To stress that urgency and conviction. That's what we want to see. Because think about it, these guys, they play with big money. To buy some calls with time, it's like flyers for them, right? It's like flyers for them. That's why the spec action in a lot of these names, like, I know you guys like to trade these names, but the little spec action that they're seeing, I just can't even be interested in it because it's peanuts. It's peanuts. Like Tesla catching some weekly action and the stock moving a little, whatever, Like, we know when they get excited how they can buy these things. We know what it looks like. We see, and you see the action that's coming into these things. It's nonsense. Yeah, and you got to understand too. Just like us, there are degenerates out there with money that are probably fooling around in weeklies to keep themselves occupied. No, maybe they own reopening plays and they're like, you know what? I'm gonna throw a couple $100,000 into Tesla calls just in case they rotate out. And the other thing that we didn't have to worry about, that you have to worry about because they're in legitimate corrections, these smaller orders could be shorts just hedging. If you own one of these names that have taken a licking and I'm saying you're short of these names, you throw $500,000 in calls to protect those profits. That's normal. Yeah, especially when they're oversold. You know what I mean? Especially when they're oversold. They love to trade around core positions like that. You get an oversold bounce, you flip the calls, and you still short out the eyeballs. Joey, amen. You hit the nail on the head. That's what options are for. That's what, before real degenerates took over the option game, that's what they're for. I'm here. I am in my rocking chair telling you stories from back in the day. Or back in the day when, how I'm familiar with options, it was primarily for that. You either built a position in equity and you wanted to utilize leverage and add a little risk to the book. So you added some calls, right? Or puts or whatever. Or you're hedging your equity position. That's what the option market was for. Then the riffraff took it over and it's a casino. You know, it's a casino now. So, but anyway, what other names do I have on here? I said Alta DT. Oh, BGCP. This, you know, you guys know this name. We spoke about it in the past. This doesn't get much slower than this name. BGCP. So here you go. Look. If you're looking for a cheap stock, it's $4 in the right sector, right? Maybe you like to play cheaply priced equity names. You know, you don't want to flip them. You're patient, whatever the case. This is not a bad one. All right. Look, you got a ton of real estate to the upside. It's a financial name. And a lot of these names have been acting well. So if some eyeballs come on because this thing is severely undervalued, you know, you might see this thing double from here if you're patient enough. Might happen all at once too. You know, once some eyeballs look. But again, you need to be patient because this thing, you guys know, it's slow. I tried trading the equity in this thing off the initial activity. My God, it's like pulling teeth. And it had a nice move, if you remember, right here. Right? This was the move here. Right? You remember it, right? So it had a nice move and it was like pulling teeth. It was literally up like 12 cents every day. So, you know, it's that type of play. It's that type of play. You're not buying weeklies looking for a double. And that's it, right? All right, we want to look at some names before we wrap it up. Let me open up this chat window so I can see everybody's questions here. And all right, let's look at some names together here. Yeah, I looked at Match. You know, I'm surprised they're hitting it over the head. This is become one of these high growth names. I thought it'd be more of a reopening name, but you know, this is probably the reason why you've had a big move. So tough. I mean, you're getting to the point like a lot of these that we just looked at where you might have a tradable low here. You're getting pretty close. But yeah, that's the problem. It's digesting this now with the high growth names. So a little correction, consolidation here would be normal. You know, yeah, in other words, even if it's in a consolidation, it may find a bottom, you know, a tradable low type of thing. So keep an eye out for put sellers. They like to sell puts and nail bottoms in this name. And they haven't been around for a while. So I would keep an eye out for put selling there. Yeah, it's too many bulls, man. I can't bless this name. I'm sorry. I can't do it. I know Amazon, of Antarctica, the whole 9 yards. I can't do it. Too many people looking to buy the dip. Yeah, Fubo is in that category, no doubt. Look at it. Fubo is breaking down completely now, honey. They're getting buried. They're getting buried. You know? Remember we were talking about that thing, Ani, recently? Right here. Look at this. So, you know, this is what we were talking about, if you remember. You had a dip here, and the problem is that, you know, you look on Twitter, everybody's buying the dip here. Everybody. Like thinking it's over. Fubo, you know, I see guys on Twitter talking about Fubo being the most undervalued stock on the face of the earth. You look at their fundamentals, they're bleeding to death. You know, bleeding to death. So there's a niner here. You may get a bounce. But honestly, would it shock me if it ended up back down on the table here? Not one bit. Not one bit. And I don't know what they do. I couldn't care less what they do. I'm just talking about you had, and we know it well, right? You had absolute euphoria blow off top here. There's no ifs, ands, or buts about it. Okay? So you had a lot of riffraff come in here thinking this thing was the next Amazon. And there's going to be a lot of sellers. Skills right in there with it. Right in there with it. So I know from what I hear, Aunt Jemima supposedly is better. Again, I don't know fundamentally, but that's what worries me about it. Too crowded. Too crowded. Way too crowded. So trades, look for trades, but don't overstay your welcome, you know? Sometimes, especially when there's decent sweeps, sometimes it catches some like decent sized sweep, short dated. And if it didn't run yet, you can get a rip out of it. But I wouldn't, unless you have a ton of time and you really believe in this name, I'm not going to tell you otherwise. Who am I? But just be careful. These things are crowded. These things are crowded. All right. That, again, this is another one, and that I think is a better company, but same thing. PLTR, just so many people interested. When this is done, you're going to have people scared shitless to buy these names. Scared shitless. They're not going to be eager to buy these dips. CHGG, I wouldn't buy it. I wouldn't buy it. Again, I'm talking about outside of a trade. Maybe you see a trade in it, but these are being sold. Look at this move. Insanity. At the least, even if you tell them, this is the best thing since sliced bread, at the least, this thing is going to chop around for a while here. At the least. At the least. So there may be some trades there, but outside of that. Yeah, Chewy, I told you guys, I'm looking to buy it, rebuy it, because I sold it in my daughter's account, and I can't get myself to buy it yet. I think we got time. They had good earnings today, right? I heard. That's what you guys were saying. Isn't it up? It's down now? No. Oh, no, it's up. That's why Jules is so excited. Christ. She was trying to tip me off before earnings, and I didn't want to listen to her, Stubborn. But yeah, that's a nice, maybe caught some shorts there. That's a nice bounce. That's the other thing, too. We're going into earnings season. We haven't spoken about that. We're going to get some decent info out of earnings. Let's say if they sell some of these, hypothetically, Chewy, let's say it's down off earnings. You may see some buyers come in because, it's oversold. And that could tell you maybe a lot of the bad news is already priced in, at least over the short term. So earnings is a good thing coming up in these things. Well, Chris, we got some macro perspective. What are you seeing in options? I remember they sold some puts. Yeah, TLT, nothing. I haven't seen anything dramatic recently. The last batch of notable activity in TLT were those put sellers that we saw into the weakness. There hasn't been, isolated trades here and there. There hasn't been anything really noteworthy. Prior to those put sellers, there was a ton of put buying in this thing. But, it already was weak at that point and selling. But the last notable action was put sellers. A couple little call buys here and there, but nothing since then. UUP had a little bit of bullish activity. They were early on the first batch of UUP. I got to dig up the date. It was somewhere into this weakness over here, I think. Or here. Maybe here. Anyway, they bought some recently, UUP, about a week or so ago. So some bullish activity in the dollar. TJX, I bought the same exact line. What did I pay? $350, something like that? Did anybody remember the price of those things? Something 50, I think I paid. No, wherever it was. What was it? 450, 350? Hold on. Right? Yeah. Right next to what they did. Yeah, I bought some TJX for a swing. Here, this line here, guys. The line they hit. They hit some Aprils too. Where's it? Yeah, I think 350 I paid. Oh yeah, because this is what they paid. And I bought it right after they did. So I didn't get the same price they did. See here? That was the initial sweep here. That was the initial sweep. Yeah, right at the money. Right at the money. I mean, the stock was unch when it caught the action. It closed up $1, moved off of it. But yeah, trust me, I bought some TJX. I am not going bonkers swing trading here by no means, Mike. Not even close. But yeah, I finally saw something that caught some decent action that, hasn't gone parabolic. It was worth taking a shot off that action. Yeah, maybe they're betting breakout, it's got some time so you can be patient. You don't have to worry up and downs, day-to-day stuff. That's what I liked about it. DG, it would fit the bill, right? It's in that group. Had a nice ramp here. See, that's what I liked about TJX. Like DG is a little extended recently here. But some of these names look good. You see some of these things coming back. Home Depot. Look at Home Depot. Like, look at this rip. You've had some good looking names. They're getting ready to report. FedEx, UPS, the rails, right? We've talked about UNP. That's back at highs. So if you can buy these things when they're dead or off dips, you can at least get a trade out of them. You can at least get a trade out of them. MasterCard, somebody mentioned, that thing's been playing ping pong up and down, but still looks okay. There was a bull bet there today. Visa got hit off the news, bounced a little bit. GE, there was some buying there again. Off a little breather. The thing to worry about now is earnings, That's the thing to worry about now. Trades. That's the thing to worry about now. Citigroup, I know. I'm trying to wait it out on these banks, see if I get a bullish sentiment signal, and maybe, I'll take a shot on one of them for a trade. But, there too, Rye, I would just trade them because of this. They're not, this is not a new move here. We've had a decent run up. They definitely could go higher, They definitely could go higher. But the risk is just a little length behind the correction. That's all. They look good, dude. All of them caught action today, right from the open. Goldman, I think, was up already. Goldman. Bank of America has seen some decent action the last couple of days. Yeah, the problem with these, Rye, is I think what you're describing is that the easy money has kind of been made already. You know what I mean? And to catch a really nice move, you're probably going to have to sit through up and down and chop and, like the easy money, the quick rip money has been made in a lot of these things. That's the problem. Not just the banks. I mean, look, see, Caterpillar caught a nice bet. When was it? Yesterday, the day before? But, yeah. The year of agita. It's true though. But listen, you're coming off, we're coming off a year where you could have thrown a dart for half the rally. No? I mean, come on. Yeah, what are you going to do? So, yeah, every day's not a holiday. Yeah, it was. I remember we had one of these webinars and we were all spooked how easy it was. I think we were talking about SPACs at the time. They would catch a sweep and the stock would be up $3 the same day. So when it gets that easy, you're near the tail end of it and things get tougher. But I'm telling you what I think. Listen, last year, right, after the first half of the rally, like when things got stupid and everybody and their mother was making money, including the riffraff on the long side, okay, you're not going to get any real answers about your strategy, your system, you as a trader. You're not going to get any legit answers from that type of market. If anything, you're going to develop bad habits out of that type of market, right? Because you could get sloppy, get away with it, make money. So I think we're entering now a period where you're going to get a better understanding of what you got. That's why, like I said, sentiment, all the sentiment signals were useless this end of last year, second half of last year, right? You weren't getting bullish signals. So it's like no need to pay attention to them. Now I think, they're going to be a more important thing to pay attention to, right? So what that allows you to do now is to see how disciplined you are. Well, last year, discipline was out the window. You look like an ass. Any stock you sold, period. It went higher. Now you're going to learn a lot more about yourself as a player in this game. And there's a lot of people out there who thought, oh man, I'm only trading a year and I'm profitable already. And I do this, I do that. Yeah, okay, we'll see. We'll see. You gotta put your work through the test of different climates, different environment. This market's not always the same. There's different environments out there, and you gotta learn these things about yourself. When to be aggressive, when to sit on your hands. What to do in the meantime. You're not going to get those answers in last year's market. You're not going to get it. Last year you wanted to buy everything, right? You felt like you missed everything. You missed so much. You couldn't buy enough. Try doing that now. But, it's everybody, Bill. It's everybody, man. Everybody. It's everybody. That's why what you learn, you learn about yourself that, like you said, you in 2018, that's where you're going to strike when the iron's hot, and you want to hold on to that money when the time turns, You give back some, that's okay. But the bulk of it, your job is to hold, that's your job now, to hold on to it. Not to, people think, oh, I got to double my account from there, and I got to triple my account from there. It doesn't work that way, right? Yeah, but John, it's okay. Listen, it's more luck than anything else, especially when you're aggressive into the rally, okay? You got to have luck on your side not to get caught at all. Usually you're going to get caught in something. But like you mentioned, it's either the ability to cut, right? Or the ability to go into cash or predominantly a larger cash position earlier to allow you to survive and not get lumped up and hold on to the bulk of the money you made on the upside. That's what it is, man. That's what it's all about. You know, too many people look at it like, oh, I got to make money every week, or I got to make money every month. You can't. It's impossible, this game, to look at it that way. Yeah, and that's, I'm glad to hear it, Ryan, because that's what it's for. You know, it's no secret sauce, right? It's no crystal ball. It's just more of Ani said it perfectly, a compass, you know, a guide of when to be aggressive, right? And when to hold the reins a bit. You know what I mean? And then the beauty of sentiments that no matter what time frame you trade, there are different, you know, there's for every player out there, right? If you're a short-term player, you know, there's no reason to pay attention to some of the longer-term positioning stuff. You're looking at the shorter-term stuff, and that's gospel. That's what you're trading off. You know, and I told you, yeah, it sounds corny, but this is like my approach has always been. And it's not, it hasn't made me more money. It saved me from losing money. You know, that funnel approach I told you about, right? So I go like this. That's where max risk. And then as a rally stretches, you know, my exposure gets thinner and thinner and thinner and thinner until, you know, we get a yank. Then I look to get aggressive again if I can. You know what I mean? So what that allows me to do is, even if I'm early, before that correction shows up, I'm not all in. You know, I'm not all in. Yeah, well, that's, you know, the thing, John, for me, I told you guys, all my hits, my P&L, all the money I make on my P&L happens here. You know, happens from my entries here all the time. You know, up here, sometimes I have bigger winners, but because I didn't size the same way as I did here, they're not going to have the same impact. You understand? But here is where predominantly all my entries are the most profitable. And, you know, the reason why is because all the selling, the majority of the selling has been done, right? All the bulls have been shaken out. There's not many sellers left. Only buyers around for when the tide turns, right? When you get up in these neck of the woods, it's a different story now, right? You know, you get a little dip, you can't size like you would size over here, because what about this is just the start of the selling? Indicated. Yeah, did you asked me that already, Dan, didn't you? Which one? This one? I don't know. There's some oscillators. You think I know what the hell they're called? This is called matrix something. MS. It might be custom. I'll try to find the name. I think I don't know what it's measuring. Well, everything for the most part that no, not a MACD. Well, maybe. I don't even know exactly what a MACD. Isn't MACD like momentum? It's all of the indicators I use measure overbought, oversold, basically. You know what I mean? Moving average, convergence, divergence. I don't know what the hell that is. Yeah, that's what it says. MS. MS. Anywho, but they all measure the same thing. If you look at them, like I'm sure if you had any oscillator, it would show sold, overbought, pretty similar. All right. Anybody else have anything to add or any questions? Anything good? I'll post. There's a cool trading diary that I posted before from Bova. I'll repost it on my regular Twitter. things to keep an eye out that are important. Bitcoin. Let me do some Bitcoin analysis. Let me see. Hold on a second. I'll give you Bitcoin. You had a buy signal not too long ago in Bitcoin, but let's see where Bitcoin is. I like handicapping Bitcoin, even though I don't have a Bitcoin wallet. I like to handicap it. Hold on. Let's get up the right stuff here. BS. Where is it? All right, let's see what we got. Bitcoin, yeah, looks like it's getting ready to break out, but this is the hourly chart. You gotta wait for dips. Like everything else I talk about, right? Story of my life. Wait for a dip. But you got to wait for a dip. Let's see here. The daily is a little too crazy to look at, but let's see. Oh, you got a little upside niner there too. Breather. So you have a breather here. Yeah. I don't know. Tough here. It looks like it's going to break out, but what I would wait for is maybe they shake out people playing for the breakout here. And then I'd buy the shakeout, Joe. What do you think of that? I'll start posting the sentiment. I usually post it when it's around a bullish signal, let's see, short-term trade here, 5 minutes. Let's go 5 minutes. Yeah, you don't have nothing there, 5 minutes either. You had a buy signal here, 5 minutes, and a niner. But here you're in no man's land. No man's land. All right, but if I see close to a buy signal on the sentiment stuff, Joe, for Bitcoin, I'll throw it out there. Try to give you a heads up on it. All right, ladies and gents, always a pleasure. Thanks for stopping by. Again, wallstreetjesus.com. You have any questions? Good luck the rest of the week.